If we are entering an environment where the Fed accelerates the pace at which interest rates move higher from here, what does that mean for the broader financials?
Well, interest rates are going to be the catalyst and the determinant of how these banks are going to perform. The cycle we just went through is not traditional at all. Typically, a recession, the banks do really poorly on credit. And this time, because of all the monetary and fiscal stimulus, there's been no credit pressures except for some CECL increase and then release that we went through up in 2020 and down in 2021. So as interest rates either go up or don't go up, it will determine the fate of this group, because that's really what's left on the table is what happens with interest rates.
Gerard, keeping interest rates in focus, what's top of mind for you when looking at financials?
I would agree with Marty that the interest rate outlook is critical to the outlook for the performance of the bank stocks in 2022, especially short-term interest rates. What we've seen recently is that the stocks tend to move with the long end of the yield curve, the 10-year government bond yield, and that is, I think, going to give way in 2022 to the front end of the curve and the Fed funds rate. If you go back to the last tightening cycle of 2016 through 2018, as the short end of the curve went up, the bank stocks did extremely well. The other key factor is loan growth. That is going to be another driving force in 2022. We're starting to see the weekly data, the H8 data, as it's referred to, from the Federal Reserve that comes out on Friday afternoons, is showing some nice increases recently, particularly in commercial and industrial lending, which we think will be the driver for total loan growth in 2022.
Differentiating, Gerard, between the big banks versus regional players, where would you put your money to work in 2022?
What we're looking at are two factors. One is the so-called asset sensitivity of the bank's balance sheet. So that's the benefit they would receive that Marty and I are talking about with higher interest rates. So that's one way of playing the bigger banks. Names like Bank of America and Wells Fargo are very asset sensitive. But then to play a more specific strategy on the regional names is to own the banks that are big commercial and industrial lenders, names like KeyCorp or Fifth Third or Comerica. These names should all benefit from the increased loan demand coming from an economy in 2022 that should continue to grow at above average levels relative to the last 10 or 15 years.
Yeah, Marty, incredible comeback when you look at a name like Wells Fargo, up 60% this year. Is there more room to run?
Well, again, that's a turnaround story that has a lot of other issues that are driving it. So when you look at Wells Fargo in particular, there still is some headroom with valuation because there's some catch up that it's lost value relative to the group in the last 5 years when they've been dealing with some of these issues. So as they're coming out the other side, that definitely gives you something else besides just interest rates that you can count on. Going back to loan growth, what we're going to see is this inflation that we've seen across the asset classes, home prices, auto prices, commercial real estate. Is almost baking into cake what Gerard's talking about here, which is loan growth is going to start to percolate. So that is going to be there. But again, the cycle between 16 and 18 was very positive, but between 12 and 16, while we waited for the Fed to move, was a holding pattern of really fits and starts. They would go up and they would come back down for the banks. So it is going to be how the Fed moves the short end of the curve and how quickly, which will determine 2022 and any upside from here.
Gerard, of the bank CEOs, which CEO has managed this pandemic the best, in your opinion?
I would say that JP Morgan's Jamie Dimon has done a very good job at managing, as has Brian Moynihan over at Bank of America. Two very large banks have managed the pandemic extremely well.